Everyone is talking about this controversial stock Alibaba after it fell 10%, largely due to the cancelled cloud unit IPO. Analysts are also hot on Alibaba's tail, all rushing to cut their target prices after the stock sell-off. However, Jack Ma's office released a statement saying that the stock price is very undervalued and reversed their plan to sell the shares because the stock price has tanked so much. So who's right and who's wrong? Let's find out more in today's video. Let's go! In order to answer the question of whether Alibaba is a bargain or a value trap, I dug into a lot of research reading about the analysis articles on Seeking Alpha. But before I dive into the bull and bear thesis of Alibaba, I just wanted to share that Seeking Alpha is running a 30% off time-sensitive offer only for Black Friday. I personally have been using Seeking Alpha Premium myself to do all the US stocks analysis. And to be honest, it is very easy to use and you get tons of in-depth premium articles you are not able to find anywhere else. In fact, I have done this video on Alibaba largely by utilizing Seeking Alpha itself. So if you're interested to start your 7-day free trial, click on my affiliate link down below to get started. Remember, this promo will only last for this Black Friday period, so wait no longer and give it a try today. With that, let's jump back to our bull and bear case. Let me present the bear case first, since we all roughly know what's going on already. In just the month of November, we have 21 analysis articles being written for Alibaba stock. And among these 21, we have 4 whole ratings being published, and their thesis revolve around a few key points. The first one is the obvious one: the cloud unit is cancelled, right? And there's a revenue miss. Second one is the stiff competition from domestic rivals like Pinduoduo Holdings, as well as the Temu, okay, which is rising in popularity as well. The third point is the chip sanctions, which will limit the growth of the cloud business due to the US chip export restrictions. The fourth point is the geopolitical risk and the CCP, which is the Chinese government stigma, not going anywhere soon. Okay, so that being said, the China-US trade war, the Chinese government stigma, and the regulatory risk will always be a hangover, right? And the last point is that there's poor domestic growth right now, and a lot of people are expecting that China will perhaps see an economic recession going forward. And a lot of Alibaba's future growth will heavily depend on the macroeconomic conditions in China. So with all the property crisis and the lack of post-COVID recovery that we are all looking at, a lot of people are saying that the future growth for Alibaba is restricted. All in all, they are saying that Alibaba is likely to remain cheap due to a lack of growth in future, and it is a value trap right now. Is that really the case? Now stick with me as I present the opposite bull scam for the Alibaba stock. Remember just now we mentioned that there are 4 whole ratings in the bear camp? When we switch over, man am I surprised that there are 15 buy or strong buy ratings being published from the Seeking Alpha authors. So here's what they said. First point, Alibaba is undervalued based on their diversified portfolio. So if you were to take a look at Alibaba's entire portfolio, it is a humongous group spanning across different divisions. Like for example, the e-commerce with Taobao and Tmall, the cloud services, Ali Cloud, logistics like the Cainiao, right, which is a very smart robotics kind of logistics, and also digital media and many more, which provides this kind of holistic and resilience in a dynamic market. So despite the cloud unit IPO being shelved at the moment, most of the Seeking Alpha authors are still very confident that the current market cap of Alibaba, which stands at around 200 billion, is much lower than the estimated value based on the sum of all parts. which perhaps will bring Alibaba's value to over 400 billion. Okay, the second point is that it is undervalued based on earnings as well as free cash flow. So at the time of doing this video, Alibaba is trading for lesser than 10 times earnings and only 7 times free cash flow. On top of that, these valuation multiples are the lowest since 2019, when the average is around 33 times P/E ratio and 10 times free cash flow ratio in the past 5 years. Okay, moving on to the third point, there's still growth. So the bears, okay, have always been screaming that the revenue is sidelining and there's slow or limited growth ahead. That being said, a dive into the various industries Alibaba has a pie in shows a completely different story. For example, there are projections which indicate an estimated growth rate of 8.2% for the Chinese e-commerce market throughout to 2027. According to Statista, revenue in the public cloud in China is expected to demonstrate a strong 20.4% CAGR from 2023 to 2028, reaching a market size of 137 billion US dollars by 2028. So these are just some of the examples I've highlighted here, and given the leading market share Alibaba has in these different pies, different segments, it is highly likely that it can continue to grow in tandem as well. So the recent summit between Biden and Xi Jinping indicates that there's increased improvement in the thawing of the tense relationships. And to be honest, both China and US need each other. So it's not in their best interest to worsen economic relationships. So the bull authors are hopeful that relationships will continue to improve from this point onwards. So our last point is on the maiden dividend being issued and the ongoing share buybacks. So in a bid to attract investors, Alibaba has also announced a maiden dividend of $1 per American depository share, which translates to a dividend yield of around 1.2%. This is a positive surprise given that Alibaba has not offered any dividends before. On top of that, Alibaba has reduced the number of outstanding shares by an incredible 7.2% since they started the share buyback program in 2021. Here's a wise quote to summarize on all the bullish pointers. Many believe that Alibaba is trading at such cheap prices because it has been at the center of China-related controversy for years. Hence, the time of maximum pessimism is the best time to buy this highly profitable company with strong growth prospects. And if you can recall, I mentioned that many analysts are trimming their price targets at the start of the video. Well, the chart I see here shows that the analysts are still pretty much bullish on Alibaba Group with a price target of 63% potential upside. The recent 10% stock decline was the sharpest in over a year, and Alibaba's share price has been under pressure since Jack Ma's criticism of Beijing triggered a backlash on its companies in the late 2020. Personally, if you were to ask me, I do agree with the bulls camp out there on how the downside is limited by the low valuations and Alibaba can continue to be a stable, growing, mature company in the long run. But to answer the question on whether Alibaba is an opportunity or a value trap, I would like to put this quote out there for all of us. Never invest in a business you cannot understand. If you have not done the due diligence of the Alibaba stock and cannot hold on to the stock through the ups and downs, it's probably better to skip this stock for another one which you have more conviction in. So how to build up that kind of conviction to invest in a stock? By using Seeking Alpha to analyze the stock that you like. Again, I would like to remind you that Seeking Alpha's Black Friday 30% discount is only available for a limited time. Okay, so do remember to sign up using my affiliate link down below. and you can start your investment research right away. So anyway, to end off, do you think Alibaba is a buy, hold or sell? Do you have any other stocks that you want me to analyze? Let me know in the comments down below. Don't forget to smash the like button and subscribe to my channel for more of such investing related videos. Next up, if you have the time, you can also watch this video here where I look at 7 US growth stocks with over 30% potential upside. With that, thanks for watching and I will see you next time. Bye.